Welcome to all our delegates who have come onto the session. We've got about 270 registrations, so that's a great turnout, and thanks everyone for participating. I'm not going to introduce the panelists straight off. I'm going to just introduce the session and put up a few thoughts. The session is being recorded, and we will write up a summary of the key outputs from the session, and we'll be sending that to all of those who registered. Just briefly, while people are still coming on to the session, a little bit about who Trialogue is. Trialogue is hosting this with the Chartered Governance Institute of South Africa, and a little bit about both of us. So firstly, Trialogue is a company that looks at the role of business in society. We have a number of knowledge sharing platforms. Our conference, which happens in June this year. We have a handbook. We have a knowledge hub where people can access and get information from that. And then we offer integrated reporting and thinking advisory services and monitoring and evaluation CSI advisory services. So that's just a little bit about us. And then on the Chartered Governance Institute, I'll just briefly talk to the awards process. So one of our panelists is a judge on the awards, and he will be in attendance today. But just a little bit about that. It's been going since 1956. It works, the awards, Integrated Reporting Awards, run with the JSE. Really the aim to improve standards of reporting, and all entrants receive feedback from the judges. It's overseen by PwC. The timing is it's entries close in 30 September, the awards in mid-November. There's a nominal fee for involving. And the nice thing about these awards are there different categories of awards. So you can stack yourself up against your peers in that sector and see how you're doing, and from a reporting perspective, and get good insights from the reports, from your submissions. Okay, now onto the session. So we're talking about integrated thinking, and just to frame the discussion, I've drawn a definition from the Integrated Reporting, International Integrated Reporting IRC website. Report there, Integrated Thinking and Strategy, the State of Play report. There are lots of definitions and lots of literature out there on integrated thinking. But what I've just drawn, I thought this was a very concise and easy definition to play. And the strategy group basically defined this, and they said their view of integrated thinking is that this is a multi-capital management approach. So you will have heard a lot about the 6 capitals. So the multi-capital approach coming through there, helping organizations deliver on their purpose. We get a lot of terminology about purpose-driven organizations, shared value, and the likes of that. And then benefiting the key stakeholders over time. So a stakeholder-orientated mindset as opposed to a shareholder-orientated mindset, purely. A lot of language around creating, preserving, protecting value, linking purpose, and this is where the integration side starts coming in, linking purpose to strategy, to risks, to opportunities, to objectives, plans, metrics, incentives, to enable better decision making. And there's a lot in that statement, because unless you are building this integrated thinking into the way that you run the organization, it just isn't integrated. And it's primarily there not to communicate, but to enable better decision making. So it requires all of these things like effective governance, culture, accountability, transparency, recognizes the importance of value destruction, boundaries of which the organization touches on. So looking down into the supply chain, for example, changing conditions and context. We live in a complex world, external environment shifting dramatically, and organizations need to navigate those changes and to have the right feedback loops in place to enable effective decision making. So there's a lot in that statement that you can take out of that. And that's what we subscribe to, that view of integrated thinking, and that's what the topic is about today. So I want to go to a poll question now, and just ask you straight off to input into the session. And just to get a view from the audience, in terms of stage of adoption of integrated thinking by South African companies, which of these following statements do you believe is most representative of what integrated thinking is? Ideally choose one. If you really can't, then say, I don't know, I can't say. But if you can just tick a box there, the poll up, I assume, is live, Shane. And we're going to give you a second just to fill that in now.
58% have opted for the second one, and then 23% have opted for the first option. Integrated thinking is largely absent.
So I think that sets the scene very nicely in terms of what we see out there. As a company that works in this space and works with companies, we do believe that there's a lot of aspects of integrated thinking applied within organizations, but very often not holistically applied, very often run in pockets. And in certain companies, yes, I think it is, it really is at an early stage of development. Okay, some observations from our side, just on the topic, and this is just really based on our thinking. We could say a lot more on this, but just some thoughts from our perspective. The imperative to adopt an integrated thinking approach is on the up. It's gaining momentum. I think this is initiated by these macro trends that business is facing: demographic trends, technology shifts, absolute focus on biodiversity, the environment, climate change, and the like. These macro trends are resulting in pressure being placed on business, because business can influence these spaces positively, or it can actually contribute negatively to some of these sort of macro trends out there. And so there is a focus and an expectation for business to respond. There's influence coming from investors, regulators, other stakeholders. Business, on the other hand, is preserving its reputation, and it understands that how it is seen in the space of managing ESG issues, integrated thinking, good citizenship, and the like, that really matters for their stakeholders. The terminology we reckon is confusing. There are multiple terms alluding to integrated thinking, purpose-driven organizations, corporate citizenship, CSR, sustainability, and the likes. Ultimately, all really saying something similar, although there might be nuances in the differences of the terminology. Companies are struggling sometimes with the multiple codes and standards out there, all serving, I think, a very unique and specific purpose, and typically all encapsulated within the theme of responsible and sustainable business, but sometimes tricky to navigate. What do you take on? What don't you take on? And are standards taken on seriously or not? Or are they just referred to? Integrated reporting, and this is very strong in the King Code, assumes integrated thinking. The reality is that it doesn't always apply the way we see things. That's our perception. And often we think this is not necessarily the right way around, is that the reporting process has been reversed or back engineered into a thinking process. And fundamentally, one needs to think and report in terms of how you're doing things. And I'll share more about some more thoughts on that in a moment. And that integrated thinking is not a quick fix. It's not something that you can switch on and switch off. It takes time. And not only does it take time to embed these integrated thinking within the organization, but the goalposts are constantly shifting. Expectations are going up. New codes are arriving. There's consolidation of codes. So it's very difficult to say, well, we've ticked this box, we've arrived, because the moment you think you have, something has moved. And then ultimately, integrated thinking needs leadership direction. So just some thoughts. And now I'm going to just open up for a second poll very briefly. And Shane, if you can switch that on, I'll talk to that. But to what extent do the boards and CEOs adequately engage? We spoke about leadership and leadership's required. Do boards and CEOs adequately engage in the integrated reporting process and in the adoption of relevant codes and standards? So at level 1, boards and CEOs are fully and proactively engaged in these processes. They push back into the businesses to how the report is structured, on what codes are taken on. At a next level down, engagement is delegated, but the feedback is actively debated at a senior executive board CEO level. Actively engaged. So if you were to ask a CEO there what codes and standards and why they're taken on, there would be a coherent answer and a knowledge there. Passive engagement, the board and CEO are required, they delegate that responsibility, and they sign off on what the integrated report, they sign off on various codes. So they basically approve them, but aren't fully engaged in the actual process and debating what's taken on or not. Or there's minimal oversight and limited oversight of the board and CEO. And at that level, if you were to pick up the phone and say to any director, what codes are we subscribing to as an organization, you'd probably find they wouldn't know the answer. So which of these, and I think if you can tick those answers, and I can see the answers coming through now.
We've got the majority for this one. 41% have opted for the middle option, passive engagement. And then the next favorite is 30%, option 2, engagement is delegated.
And an even number saying fully engaged and not engaged. So I think that's consistent with the previous report. And again, very consistent with our perception of what's out there. There is active engagement. Very often, this is something that is pushed down into the organization to get on with, and with oversight at a board level. And actually, we think that integrated thinking is fundamental to the way the business is run. And the more senior executive support and mandate given to this function, the better the situation in terms of actually ensuring that it is coherently and fully adopted within the organization. Okay, so then just the last perspective from our side, and one more poll, and then we'll get on to the panelist discussions. So Trialogue has worked on an integrated thinking framework and model, and I won't go into too much detail other than to say we think it needs to start with 5 principles, one being the positioning and awareness, understanding of the external environment, understanding of the business response to that. You need integrated leadership and capability, and a mandate behind that. That's conscious adoption of what's going to happen in the organization. Following that, the mandate to put in the right structures, the governance structures, the oversight and the control, which then leads down into the performance management process, KPIs, assurance, target setting, benchmarking, etc., and then ultimately out into communication. And we think that's the right way around, rather than starting at the 5th principle, where we believe it often does start through a reporting process, and as I said earlier, back engineering it back up into the business. So as report authors and writers, one ends up having discussions which are really about how the situation is managed and not how the situation is communicated. So that can translate into a sort of framework where we've got different elements within each of those 5 principles, and one can then map how the organization is adopting an integrated thinking approach. And then a final poll, and then I'll hand over to the panelists. So in cases where integrated thinking is not holistically adopted, reasons for this, and you can tick as many as you like here, is there's an absence of a regulatory or compliance pressure. So we see that in reporting. Obviously, there are reporting requirements, and the energy that goes into reporting is substantial. But is there sufficient regulatory compliance pressure in integrated thinking? Barriers due to the complexity, the long time frames and resource requirements, insufficient guidance on integrated thinking and adoption methods. The business case for integrated thinking is not clear, or it's not taken seriously enough to see that there is a strong link between the business case and adoption of ESG and embedment of ESG processes through the organization. So that business case is not clear, or there's insufficient leadership priority given to this topic. So please vote on that, and then we'll have a very brief takeout, and then I'm going to introduce the panelists.
Please bear in mind this is a multiple selection poll, so don't wonder why everything doesn't add up to 100%. Favorite is 60% for the middle one, insufficient guidance on integrated thinking and adoption.
So there's a balance of, it's less about the regulatory environment, but it is about all of these other things. And that, I think, in summary, sort of spells out the complexity and the barriers to integrated thinking, where these are real hurdles to adoption. It's not an easy fix, as I mentioned, and this is testament to that, I think, coming through in the voting poll. Okay, so I would just like to now just introduce our panelists, and each of them is going to, the format of the session is each panelist will talk for no more than 5 minutes, just introducing themselves and their perspectives on the topic. And then we're going to go to a Q&A, and the Q&A is really an open discussion. Please direct your questions to a panel member if you have a specific question to the panel members. They all come from very different backgrounds and perspectives, so you can direct it to an individual, and then they will respond, and we'll have a deeper discussion about integrated thinking. And then just to remind you that we will be capturing the essence of these conversations and feeding back to everyone. So Firstly, Warren Moran. Warren is a professor of accountancy at the University of the Witwatersrand in South Africa. Warren's got a PhD from King's College London. He's a visiting position at PwC. His research includes interests include auditing, corporate governance, financial reporting, and integrated reporting, and he is one of the judges on the CGISA awards process. And then I'm going to introduce all three. So Nicole Martins is currently in a capacity at the PRI. Nicole provides insight on international trends and developments with respect to responsible investment. Her current focus is on identifying and addressing the needs of South African investors with respect to integrating ESG into their investment processes. So she would look at it from an investment perspective, but also from an adoption perspective, I suspect. She holds a BA Honours in Economics, currently enrolled in an MSc Finance at the University of London. And then Donald Cole is a 27-year-old, sorry, 27-year-old. He's been in 27 years of communications and corporate affairs experience, having served as a media relations manager within the Transtech Group, MD of Morocco Communications, head of corporate communications at Santam, currently head of communications at the V&A Waterfront, where they've done some work in looking at, really bedding down processes from an integrated thinking perspective. So three very different perspectives. I'm going to hand over firstly to Warren to just introduce the session, and we'll switch off the PowerPoint from there. Over to you, Warren.
Thanks very much, Nick. So I think Nick has touched on a variety of very important points, and we could probably talk for several hours just on each of them, but the brief was very clear, 5 minutes and no longer than 5 minutes. So in that spirit, I'll just talk briefly about the concept of integrated reporting, and particularly the link between integrated reporting and integrated thinking, because that's one of the areas where we're currently doing a lot of research at the university, and also because of my involvement in different evaluations of integrated reporting and integrated thinking for institutes like the Corporate Governance Institute. So the question is, how can a non-outsider how can an outsider looking at a company's integrated report discern whether or not there is integrated thinking? So, I mean, as Nick pointed out, integrated reporting assumes integrated thinking. But then if you were listening carefully, when he got towards the end of the presentation, he raised the very valid criticism that very often companies start with the integrated report, decide what needs to be in there, and then reverse engineer from there. So there's a disconnect between this idea of what is actually taking place internally at the structural level, at the operational level, and then what actually gets reported to stakeholders. So how can we as a stakeholder group determine whether or not integrated thinking is actually taking place? What are the litmus tests that we can use? And in trying to explain this to practitioners, to professionals, and to students, and given the current context, I like to sort of analogize to COVID-19 and say, well, we can't really observe this thing called integrated thinking. You can't actually see it under a microscope. If you go and ask boards of directors, do you apply integrated thinking, which as researchers we do, they invariably start the conversation by telling you absolutely they apply integrated thinking. But how can we actually test for the presence of this integrated thinking? Do we have a type of antibody test that we can use, where if we score above a certain amount, we can say, well, in all probability, on the balance of probabilities, integrated thinking is present or integrated thinking is not present. So I just want to give a couple of points that you can think about when you're analyzing an integrated report in whatever capacity. As a preparer, reflecting on how to improve your report; as an investor, looking at the report and trying to discern if this provides useful information from an analyst or a risk management point of view; or even from the point of view of a general stakeholder reading the report, wanting to understand what it is that company is really doing. So a couple of points to touch on very briefly. The first one, I think, is the length of the report. It's a really simple litmus test. If there is integrated thinking, which means that you really understand holistically what you're doing in your business and your understanding is thorough, then that means you should be able to take a really complex business model and explain it succinctly and in plain English. So if I can take your report and I can read it and I can understand your business model, your strategy, your risks, and how these things are interconnected, that points to, doesn't prove, but it points to the operation of integrated thinking. Because to put it very simply, a master should be able to explain something which is complex to a non-expert in a simple and clear way. The non-expert is not going to be somebody who will understand every aspect of the business model. That person is not trying to be a member of the board, but he should have a good understanding of how the company functions at its broadest level. So report length is a really good indicator to keep in mind when you're studying these different integrated reports. Linked very closely to this is bias. Be on the lookout for reports which I like to describe as overly decorated. Lots of pictures and tables and graphs, and they look very attractive. But when you actually start analyzing the reports and you start looking at all of the pictures, you very quickly realize that they don't really tell you about what's actually happening at the company. They become decorations in the integrated reports. I like to refer to them as the baubles on the Christmas tree. They look great from a distance, but they don't really tell us about what's actually going on. And going hand in hand with this concept of the decoration of the report is the concept of bias. The fact that the reports tend to tell you only good news. Even at the best managed organization in the world, things are not going to go according to plan. And what's more interesting as an investor, as an analyst, as a risk assessor, is not what you're doing when things go well, but what you're doing when things are not working out. So be on the lookout for these integrated reports, which tend to sort of create a Shangri-La type of explanation of how the company is functioning, where all of the negative issues or adverse issues and risks are either not discussed, which happens in some reports, or are marginalized or paid only lip service to. So that's another really important indicator, the presence or absence of bias. A little bit more specific is the actual type of the disclosure that they give. And this can be evaluated quite simply. Have a look for the mix between qualitative and quantitative information. And that quantitative information doesn't have to be monetary, but there should be some monetary indicators. Now, often when I say this, people are aghast and say, well, how can you talk about monetary indicators in the context of ESG? I mean, this is heretical. No, not at all. Because remember that integrated reporting is not supposed to be a substitute for capitalism. The Integrated Reporting Committee is not asking us to abandon the shareholder, ignore the fact that we have pension funds that are investing in the companies, and advocate for some type of grand Marxist state. Not at all. Integrated reporting is about responsible capitalism, about sustainable capitalism. The academic term is enlightened capitalism. In other words, managing your business in a way that doesn't destroy society and the planet, to put it in very simple language. So if you've got a company that has embraced this idea of integrated thinking, they understand that there are these 6 capitals and that they're all interconnected and that they need to be managed, as Nick has pointed out. What are the indicators that that management is taking place? That they've collected data on the 6 capitals, which means they've quantified something, and those quantified measures are being communicated and used in internal management. And then as a byproduct of that, they end up in the integrated report. Because if they've been used for internal management purposes, then they should be material for explaining how the business was operated and managed. And if that's the case, we should see them in the integrated report. So integrated reports that are only fluffy, lots and lots and lots of narratives with lots of wonderful pictures, but no quantified measures that have taken place, whether monetary or non-monetary, that tends to point to the absence of integrated thinking. And then my final observation, to make sure that I stick to my 5-minute cap, is action-specific and relevant reporting, from strategy to risk to KPI to post-implementation review. And if you can get that sort of pattern coming through in the integrated report, if you as the reader can follow how the strategy is interconnected with the risk, how that strategy-risk combination results in a particular type of business model, which gives rise to certain types of key performance indicators that the company is tracking, and they then tell us about those key performance indicators. Again, this idea of a mix between qualitative and quantitative information, that starts providing us with certain suggestions or insights into the presence of integrated thinking. And then the final litmus test, which I like to use, is, believe it or not, the presence or absence of assurance. Now, some people think that that's rather odd. But remember, in order for you to have an assurance report, and it doesn't matter really what's being assured so much as the fact that assurance has happened. In order for an assurance provider, whether it's an external person or the internal auditor or even the audit committee, for those bodies to have actually provided assurance, the thing that they're providing assurance on must exist. And that's a really good litmus test for a non-expert outsider. If somebody has gone and has been able to assure something, and they've been able to express an opinion on that. That means that that company must have the systems, the processes, the controls, the data in place to support that assurance function. And the fact that somebody was able to observe that is first prize, because we as outsiders can't observe the management internal processes, but we can observe the byproduct, the antibodies of that process. And in this context, assurance becomes a type of integrated thinking antibody that we can almost observe and then draw inferences on. So that's my sort of contribution to today's panel discussion, that Nick has hit the nail on the head. A good integrated report doesn't mean that there's integrated thinking. And we need to have it very clear about what we mean by good. By good, we're looking for succinct, we're looking for context specific, we're looking for a mix of qualitative and quantitative information, and we're looking for a good connection, a good story from strategy to risk, to operations, to KPIs, and then to the post-implementation and evaluation. And the cherry on the top, did you have assurance? What did you assure? What was the assurance opinion? What was the level of assurance? That's really technical stuff that you can get into in a more detailed analysis. But for a preliminary review, was there formal assurance, yes or no? And that starts to give you a good insight into whether there is integrated thinking starting to take hold, whether, as Nick pointed out, there's a very elegant report that then is getting reverse engineered into different parts of the business. And that's my 10 cents on the topic. And Nick, that's only 1 minute over the schedule.
Thanks, Warren. But there will be obviously opportunity to ask Warren further questions. So I see there are some questions coming through. We'll come back to those. Thanks very much, Warren. And over to you, Nicole.
Great, thanks so much. And just a quick thanks to Trialogue and CGISA for the invitation to be part of this discussion. So just as a quick overview for those of you who are not familiar with the PRI is the Principles for Responsible Investment. It's a UN-supported international NPO. And we work with investors around the world, about 4,000 of them now, on integrating environmental, social, and governance factors into their investment decision-making processes. So helping them to practice responsible investment. The investors that we represent at the moment have a collective assets under management of more than $105 trillion US, which means it's more than half of global assets under management, institutional investment. And I think one of the reasons we bring that up is not as a brag, but really to show you that this approach to investment is a mainstream investment approach. It's not a niche or arcane way of investing anymore. And in the last couple of years, say probably in the last 5 years, there's been an exponential increase in the number of investors that are implementing a responsible investment approach. So an approach that does look at what we would consider to be, traditionally we would have considered to be non-financial factors, so ESG factors, and integrating those into the way that we make investment decisions. And this largely reflects, I would argue, an evolution in the thinking of investors around their risk return calculations, right? A more integrated way of thinking about these things. And something like the pandemic is a really clear example of the interconnectedness between environmental, social, governance issues, our economies, and of course, real world impact. And over the last few years, what we've seen in the way that investors are approaching their decisions. And it's really a reflection of an evolution of thinking, not just by investors, but of stakeholders throughout the investment chain, including the clients and beneficiaries of investment services and policymakers and regulators in the space, is there's a growing understanding that the decisions we make from an investment point of view have impact in the real world, which in and of themselves have impact on the stability of environmental, social, and economic systems, which then in turn affect the ability of your portfolio to generate return. So you've probably at this stage heard, especially over the last sort of 2 years, there's a very often quoted a phrase about how there are no returns on a dead planet. Equally, there's an understanding now, a growing understanding, that there are no returns in societies that have descended into chaos because of poorly managed social issues or governance issues, for example. And what that means is that investors are increasingly trying to understand not just what factors are going to have an immediate impact on my portfolio or on single assets within my portfolio, but what is the impact of my portfolio on the broader system? And how is that affecting the ability of this market to generate return? And when it comes to viewing the companies in which we invest, what that translates into is really a shift in the assessment from a view of where are you now to a much more prioritization of where are you going do you have a clear objective? Do you have an end in sight, especially now with these transitions to low carbon economies, for example, or more inclusive and sustainable economies? It's less about where are you right now, or where have you been in the last year, which is often the focus of reporting, and looking at where are you planning to get to? Do you have a very clear goal in mind and a sensible plan of action to get you to that point? And investors are increasingly interested in this information in terms of these, the integrated reports, to Warren's point, making sure that you're putting into these reports really decision useful information that conveys very clearly the ability of the organization in question to understand more than just their day-to-day operations, but the context in which they operate and their relationship with that. So what is within your direct circle of influence? Where do you have impact? What has impact on you? And what are you doing to mitigate negative and maximize those positive impacts to make you not just right now an attractive investment, but an attractive investment in perpetuity, which is really what investors are looking at increasingly. So I think when it comes to this idea of integrated thinking, it's increasingly something that it's seen almost as it's an evolution, like I say, in the thinking of investors. It's the bare minimum requirement for making what is essentially just a logical, sound investment. And I'll leave there. I think I took a little bit shorter, so we give Warren his minute back.
Thank you very much. Thanks, Nicole. And then Donald, if you can give us your perspective, and then we'll go straight through to the Q&A. Thank you.
Oh, Nick, thanks very much for the invitation to the session. I think, I've had the luck of working with Nick for close to 25 years of Trialogue, trying with some success and maybe not always success in getting me to do integrated reporting in the various roles that I've played in. But what I wanted to share here really is I think the most critical part is give context to the V&A waterfront as a business, because I think it's a uniquely set up environment that if you think about our responsibilities to society and how we report, it makes for an interesting sort of environment for me in terms of where I've come from. So first off, the V&A is a 30-year-old business environment. Most people forget that, in effect, though, it's 10 years that it's been back under new management in South African hands. The shareholding is split 50-50 between Growthpoint, and they are a JSE-listed property manager, and they have their own governance requirements, being a listed business. They have strict sort of financial matrix that are built into it. And then you have the PIC, who hold the other 50% on behalf of the government pension fund, and theirs is a slightly shifted mandate. They're really kind of looking at not only just the return on the investment, but the transformation of society contribution that an environment like the V&A does. So you've got these sort of almost commercial structures with their own unique government requirements. But the V&A is a place that belongs to sort of all Cape Townians. In its founding principles, it was to re-establish the link to the sea within the city. And in fact, Cape Townians refer to the waterfront as their waterfront. And in terms of for the country, we are the country's most visited tourist destination, top destination on the continent. 25 million people, visitors annually come through. We also see ourselves as a neighborhood of the city. So actively, our work is to, in fact, reintegrate the V&A into the city. In effect, we're a private space, but we effectively run as a public space. And it's very visible if you come into the V&A. It's a very open environment, for example. You will not see any places that have restricted access, whether it's the top hotels or any areas of the V&A. Key to all of this, though, is that we see our opportunity is in providing jobs and growing incomes. And this becomes one of the first measures of the success of the business strategy, that everything we do has to respond to this. And I'll touch on then what the business strategy has evolved to up to now. We talk now, and we've been in an exercise over the past 2 years in evolving our business strategy. We are now talking around a shared value ecosystem strategy, Where this comes from is viewing the business. If you look across the BNA, we've got sort of 80 retail restaurants, we've got 400 retail tenants, we've got attractions. Commercial businesses have overtaken, in fact, the shopping element that most people are used to. We've got hotels, we've got big industries. And all of this means we need to manage and connect the whole neighborhood with all the shareholders and the stakeholders for the benefit of everybody that works within here. So you're in a position where you're looking at how your hotels operate and how you can link them to what the retail offering looks like, as an example. So we're characterized by these big, various interested and impacted shareholders. We've got some very key internal and external drivers to the business. We've got very key interdependencies that talk to us, and then we have to do some trade-offs. And just as an example, I mean, the nature and the approach to measurement and reporting means, for example, when it comes to ESG measurement, we can undertake a more visible and showing people rather than telling people what we can achieve in this environment. So we do things like setting ourselves a goal for the elimination of single-use plastics within the BNA environment by a particular point in time, in which case, 2021 has been our target. And we have involved our retailers in that, the elimination of plastic straws. We've spoken to the Pick and Pay and the Woolworths. And so often what we do is to collaborate with our tenants in helping us address social issues. We have a net zero target that we've set for the business. We use principles like the Green Building Councils to inform what type of developments that we put in place. And so in terms of just those measurements alone, as an example, we are now the greenest precinct on the continent. Any new development that gets built here has to be a 6-star rated. So that's just one of the examples. In terms of our relationship with the city, if you want to just take how that influences us, planning submissions for any development has to go through a municipal planning process. So again, that stakeholder becomes very important. It gets to inform what we can and cannot build, and how that benefits the city as a whole, and it's not just for the exclusive benefit of the BNA. Last point that I want to just make is around the purpose element, because Nick, I think in your notes I saw a reference to what is the business purpose and how does this fit into defining value. We talk about being collectively creating the world's most inspiring waterfront neighborhood. Just from a communications point of view, if you set that out as a goal for yourself and you tell people about that, it opens you immediately to scrutiny on a number of levels. I'm going to use some examples. So from a public health perspective, we have people living right next door to us, and so we have to talk to our helicopter tour operators. We are one of the busiest airspaces in the country and on the continent. And we have to address issues around helicopter flight paths because they affect noise throughout the city. When we have dying fish, some of you would have seen this in the news 2 weeks ago, massive die-off of fish in the harbor basin. The city's responsibility is an oversight on public health, and we have to respond to that. As I spoke earlier, city regulations around planning, permissions, and how we impact the city's traffic flow, we have to respond to that. We have economic opportunities here. We've got 400 SMME businesses that are established here, the largest concentration of small businesses. People come to us with an expectation that they can have access to markets. If you have 25 million visitors coming through, maybe there's opportunities for SMMEs to be here and to seek opportunities for growing their business. And this can go from retail to somebody just wanting to perform in an open piece of space that we have within the precinct. So we're probably better at showing than telling. And it's best when you come here and we walk you around the place that you can get a sense of how the integrated planning happens in our business. Nick, I'll stop there. More to it from a
Thanks very much, Donald, and thanks for all the panelists. So I'm going to just abuse my position and ask each of the panelists one question, and then we'll just open it up. And I'll start with you, Donald. I mean, it's very clear that you're a purpose-driven organization. You've got your strategy embedded in this ecosystem, this shared value purpose. And that makes it easier because I presume then, Donald, that these sort of discussions are really adopted by leadership. They're understood by leadership. The leadership can talk coherently to what you're doing, and it makes sense because it's part of the business strategy. So you, I think, are in a fortunate position from that point of view. But the question I want to ask is, does that integrated thinking translate into sustained growth in your book in financial terms? I mean, is this going to deliver the returns, the strategy? How does the strategy sit with your shareholders in terms of creating economic value? And if we can keep the questions quite short so we can get through more questions, that'd be great. But just a quick response to that.
Yes, Nick. I mean, if I think where the waterfront is now, I mean, our development framework and our development plan has still a lot of runway left. So there are, for example, parcels of land still that we have access to that we are meant to build on. Establishing those relationships and those boundaries and understanding what the city's requirements would be for the business to go ahead and make these developments possible. They have to link back to the city's own goals, the province, as well as what national government has in view in terms of the development of ports and harbors. So it becomes very, very key for us that we tick off. Tick off is one thing, but we actually have to prove all the elements that would need to go into making sure that the V&A sustains itself. So
you aren't able to grow unless you adopt that sort of very responsible approach to your
It's quite robust with the given the number of stakeholders and the different requirements that they need from us.
Thanks, Donald. A question for Nicole. So PRI is effectively a code, and organizations sign up for that as a member, if I understand it correctly. To what extent does that drive behavioral change in the organization? And is it possible that there can be token sign-ups and use of the brand? And to what extent are you digging in behind that as the PRI and really seeing that adoption of PRI as a process really translates into behavioral change in the member companies and underlying assets?
Yeah, so I mean, that's a great question, and obviously at the PRI we want to make sure that being a PRI signatory means something, and so we focus a lot of our efforts on ensuring accountability amongst our signatories. So in order to be a signatory of the PRI, to be a signatory is to make a paid, public and monitored commitment to implementing the principles of responsible investment. And one of the big things, one of the minimum requirements to be a signatory is to report to the PRI every year on your ESG integration activities, and those reports receive assessment scorecards where we assess what's reported to us according to our understanding of international best practice. We have minimum mandatory requirements that signatories need to meet in terms of the embedding of the practice across their organization. So for example, we require that the reports that are sent to us are signed off by senior leadership within the organization so that we know that it's not been sort of handed off to a part-time intern to quickly fill out every year. We also require that the policies that you put in place are applicable to at the minimum 90% of your assets under management. So we're avoiding having somebody sign up and start an impact fund with 0.1% of their AUM and say, oh, I'm a responsible investor because of this small piece. And how the PRI works on that as well is that the minimum mandatory requirements that we have in place ratchet up every year. So there's no barrier to become a PRI signatory, but once you are one, to stay a PRI signatory, you're required to continuously grow and improve your practice around responsible investment. We also are moving towards increasing accountability for sort of the leadership within the signatory base. So every year the PRI recognizes those signatories who are leading the way, who are doing exceptionally well. And from next year, it's envisioned that in order to be considered for that leadership category, you will need to Warren's point, you'll need to have the contents of your reports verified independently. And so it's one thing to sort of meet those minimum requirements and have your internal verification as part of the process to stay a PRI signatory. But if you'd like to elevate yourself and be able to claim that you are a leader in this field, it will be require some sort of independent external verification of the data.
Okay, so we mentioned the shifting goalposts earlier, and I think that's exactly what you're talking about there. There's a question from Lee Collar. Is integrated reporting and the 6 capitals an agenda item at board level? And I'm going to add to that question and direct it at you, Warren. How do you see, you spoke about the relationship between strategy, risk, etc. in a report. How do you see the relationship between ESG and strategy, and what are you looking for in terms of that connectivity in a report to see that relationship, which would reflect a degree of integrated thinking? And bearing in mind the question around, is the 6 capitals, in terms of driving holistic value, is that something that maybe there's 2 questions, they're separate, but you can maybe talk to both of them. Is that something that's discussed at board level, do you think?
Okay, so let me deal with the second part of it. In terms of discussed at board level, can often be a bit tricky to figure that out just by having a look at the integrated reports. It's not common for companies to tell you exactly what was sitting on the agenda of their boards. But there are some glimpses. You can get some glimpses from what is in existing reports. So specifically your reviews by your main executives, whether it be the CEO, the chairman review, the review by the chief financial officer. You can quickly get a sense of the most pressing issues that they thought came up holistically over the course of the year, which would have been dealt with at the executive level. And here, you're probably looking for the absence of what you think are material ESG issues in those particular parts of the reports. So it's always very interesting where you have a company talking about how committed they are to managing ESG issues, how committed they are to assessing risks at environmental and social level, translating that into financial information. Then you read the report of the chief financial officer and you get a long discussion about earnings per share and headline earnings with very little indication of how the environmental or social had any bearing on those numbers. So that's usually a good indicator of a disconnect between what they say is being discussed, what's actually being discussed, and how the information is actually managed by the respective organization. And what we've been doing, unfortunately, as researchers is going through a calibration exercise where you do find examples of great disclosure that suggests integrated thinking. As good researchers, we almost put on an auditor type hat. We go and we interview these companies, and where permitted, we actually visit them, go to different parts of their operations, see what they're doing, and try to reach our own opinion on whether there is a parallel between what's happening on the ground and what's happening in the actual organization. And very often we find that where you do see these connectivities between the strategy, the risks, the governance issues, the 6 capitals, and where we do go and engage with these companies for research purposes, that these things do actually talk to one another. In other words, not every company is being dishonest when it's preparing its integrated reports. Then in terms of the ESG as part of strategy and risk, something that we must take cognizance of is the 6 capitals are important, but the 6 capitals are not all equally important in the context of your business model. They will need to be ranked. So when it comes to strategy, the question is, have you actually taken the 6 capitals? Have you looked at them in the context of your business model, in the context of your risk-reward profile, in the context of your strategy? Have you applied a meaningful materiality assessment process? And then, how have you gone through this exercise of explaining to the stakeholders that, yes, of these 6 capitals, these are actually the priority areas, these are the areas which are of moderate importance, and these are the areas which are of lower impact. So I don't necessarily think it's about covering all of the capitals or necessarily trying to greenwash the report. Because as I say, very often you do get companies that love to talk about their commitment to the environment and society. But it's a question of saying, have you looked at the capitals? Have you prioritized them? Have you built them into the strategy? And then have you actually set indicators of performance that, as King 4 tells us, are linked to the way in which you're evaluating your board and remunerating your senior executives. And that, again, gives you that sense of the golden thread, to use the cliche term, in the report and the link between the thinking and what's just getting reported.
Thanks very much. Yeah. Okay, a question maybe for you, Nicole. So if you're looking at the influence of investors on the company, so it's maybe a little bit of a pyramid scheme. Those that are institutional investors put pressure on companies to react, to take on board ESG type issues. Can you just maybe comment on that influence and that role, and how hard are investors pushing down on companies? Are they meaningfully looking into those reports? Are they meaningfully engaging companies where where they don't see integrated thinking or where they see poor practices. So maybe just a comment on that.
Yeah, sure. So I think obviously PRI, our sort of theory of change is that institutional investors and particularly asset owners, so your large pension funds and insurers, have a very specific role to play in quite literally setting the mandate across the industry for what do we value and what do we consider to be important when we make decisions. And at least from our side, when we work with signatories across the world, and when I work with the ones in Africa and the Middle East, the focus is on, three specific things. The first one is on the evidence that we have that integrating ESG, so taking that integrated thinking approach, is financially material. We have increasing evidence, it's just growing by the day, that when a company takes into account and effectively manages material ESG issues, they will outperform companies who don't do that. And we see that in the positive and in the negative. So we see it in the returns that have been reflected in integrated companies during something like the pandemic, where there was substantially lower exposure to systemic shocks. We see it in the negative when we look at examples like the BP oil spill or Facebook and Cambridge Analytica or the VW emissions scandal, where not thinking about these things holistically costs you in the end, right? It really affects your share price later. So investors are having engagements about that, on how do I value these characteristics, these variables more appropriately, so that it forms part of my risk-adjusted return calculation for this investment. The second driver that we see is pushing it is market demand. Investors, investment managers and consultants are having these conversations with portfolio companies because whether they want to, whether they've cottoned onto it or not, their clients are pushing them to have this conversation. Especially pension fund trustees around the world are really waking up and saying, it's not only about will I retire well, it's what kind of world am I retiring into, and what are you doing with my money to create that world? So now with the pandemic, which again is a fantastic example and has really done a lot to accelerate development in this area, people are saying it's all good and well that you're using my pension money to buy me shares in Apple. Thanks so much, but could I rather have a hospital in the community where I live? That's much more important. Could we have some ventilators? So I think that kind of thing is really starting to get it into the investment conversation. And then the third one is because of policy and regulatory pressure. I mean, at the moment, there's more than 800 pieces of regulation in place around the world that have something to do with integrating ESG into your investment approach. And more than half of those have come into effect in just the last 5 years. In South Africa, we see the development of a national sustainable finance strategy out of Treasury. Included in that is working groups looking at how do we make sure that reporting alignment with the Task Force for Climate-Related Financial Disclosures, TCFD, is made mandatory by law. We're also looking at the development of a taxonomy, which will set out very clearly for investors what is and what isn't a green or sustainable investment. And you'll be legally required to report on how aligned your portfolio is with that. And in markets like South Africa and across Africa, where we have largely quite small and illiquid markets, and where institutional investors are required to invest domestically, they don't have the option to just pull their money out and go somewhere else. And that forces them to engage with these companies, to have a conversation, to say, look, I'm here, I can't really go anywhere, but I will if I don't find that there's some sort of plan in place. So we're seeing increasingly that the conversation is shifting from, sort of what you were saying about putting this pressure for you to change or I leave, to I'm putting this pressure and I'm working with you now. We're going to put this plan in place together. And it extends even to engagements that we're seeing with policymakers and regulators, with investors saying, look, I'm trying to engage with this company, for example, in sort of like cement industries, but they're saying it doesn't make sense for them to shift to greener technology, for example, until the subsidies are gone. While the subsidies are there, I'm in this. And that starts a whole new policy engagement by investors. So absolutely, it's a big part of it, the pressure from investors. Because of the pressure they're under, the pressure that they are then transferring onto the companies is increasing. And that's sort of what we want. That's how the system works. So as a business, if you're not feeling it from investors yet, you're probably feeling it from your customers. If you aren't feeling it from them, you're going to feel it from policymakers and regulators soon anyway. It's sort of coming from all angles, and it's definitely it's in your best interest to be proactive about this and not wait for it to be a sort of deal or no deal situation.
Thanks, Nicole. So I'm going to just go to closing comments now. We are out of time. Donald, I wanted to ask you about, what it really takes to bed these processes into your organization, but I want to just maybe rephrase that and say, what's the one piece of advice that each of you would give to companies grappling with this notion of integrated thinking. And if you can just keep it to less than half a minute, that would be great, just to close off.
I think for me, it's really sort of maybe just the key thing is not everything that can be counted counts, and not everything that counts can be counted. I think Albert Einstein kind of said that. But I think most important, you got to judge for yourself the materiality of things and how these deliver on the value they bring to the business. It's become very critical for us. Reporting is one thing, but I think you have to start with this other process first of really just understanding where the value comes from, and then go from there.
Thanks very much. Warren, just a final word?
Well, Nick, I would just say that context matters. Tell your investors and other stakeholders succinctly and plainly how the capitals relate to your business model, how you prioritize those capitals, and how you actually manage them. Not how you like to manage them, how you actually manage them.
Thank you. And Nicola, last word from you.
Great, last word. Thank you. I think my one piece of advice, whether you're an investor or a company looking to seek investment, is to capacitate yourself, really empower yourself so that you understand what this is about, because if you don't, you will be left behind.
Thank you so much. Thank you to all the attendees. Thanks, Nicole, Warren, and Donald, for participating, for shooting really unique and special insights into the space. We will create a summary. We will share that. I think just 1 minute over, so we'll close up at this point. Thanks very much, Shane, for managing this, and cheers from Trialogue and CGISA. Thanks very much.
Thanks very much.
Great pleasure, Nick, and well done. I think it was a fantastic session. Thanks for the positive feedback coming through. Thanks, everybody.
Okay. Thanks very much.
Take care.
Thanks again for the invitation, guys. Keep well.
Thanks a lot.
All right, to everybody.